Lately, it's felt like I'm in Spain, except the S is silent. The stock market has been absolutely brutal and unforgiving these last couple of months, and this is especially holding true for some of the stocks that I own. But nonetheless, we just had my birthday. We just had February 5th, 2022 pass us by, and that means that it's time to finally announce my goals. Now, if you're not familiar with this, if you're new to the channel, my goal is to get to $1 million by the age of 40 by using these goals. Starting out at the age of 22, getting at $25,000, putting in $500 a month over the course of 18 years, get a 17% real interest rate after taxes, 22% pre-tax, and compound that annually and get that to the big $1 million number. Now, the date that you see at the bottom is my 40th birthday. That's the day I will turn 40, which is February 5th, 2039. And February 5th, 2022, the day that we just had, just happened. And so this leads us to my performance for the year. I finished out with 31,212. I am behind the goal. Let's see, what is that? That's about $4,038. And on a percentage basis, I need the portfolio to go up about 13% to reach that goal. So I did fall behind this year, and this is the month over month goals from the time I moved everything over to Fidelity. And this is the year chart since I moved everything over. On August 6th was the first day I fully moved the 30,000 over, and I've since been trading around since then. Now, we have seen times where the portfolio was much higher. The peak on November 9th at 39,987, and a massive downturn from November 9th, going all the way to the bottom, the absolute lows on January 20th of 24,000. So that is about a $15,400 swing roughly in just the matter of about 2 months. It is absolutely brutal. And we're going to go over in this video the stocks that I own, how they performed, why they went down, and what I think they're doing moving forward, and how I plan on beating next year's goal of next year in 2023 getting to 47,242 or better, counting on my deposits, my hopeful gains in stocks that I'll get over this next year, and all that good stuff. If you haven't checked it out down below, we are having that big promotion still in M1 Finance. This is also going to be the one we're using today, looking at all the stocks that I own. But right now, they're giving $50 for getting signed up. So all you got to do is click this link that is down below in the description. It's free to use. It's a wonderful platform, and it is one that I fully stand behind. And it's a free $50, guys. So just click the link down below, sign up, and you can get a free $50, and you can help support my channel. Now, first off, I just want to look at the stock prices for the 4 stocks that I own. And in order, from largest to smallest, the 4 stocks that I own are Chewy, iRobot, Corsair Gaming, and CleanSpark. Now, Chewy is a company that I love and has seen record after record after record revenue and is finally starting to edge towards profitability. Now, if we look over the 6-month chart, 6 months ago, this was a $92 stock. And just the other day, it bottomed out finally at $38. In the matter of just a couple months, just from this point right here in November when my portfolio was at its high since it's my largest position, it went from about a $80 or so stock, high 70s, to the high 30s. From the 80s to the 30s in 2 months. And if you saw that price, you would probably think, oh my gosh, what is this business doing? Is it faltering? Are they having horrible revenues, horrible profits, horrible guidance looking into the future? Well, not quite. If you look at their revenue, it is record after record. And Q4 of 2020, $2.04 billion. It increased the next quarter, $2.13 billion. The next quarter, $2.15. The next quarter, $2.21. It is increasing quarter after quarter after quarter. And if you look at their profit margins, over time, their profits are finally getting better. Years ago, this company was a big money loser, and now the losses are almost non-existent, and even some quarters are finally starting to turn a profit, like the 2 they had right here, and they're expected to really start to turn a profit into 2022, and then ramp it up even bigger going into 2023. Look at the profit margin over time. Where does that trend look like it's going to you? This is not a company that I think, in my opinion, is going down the toilet, a company that's unsuccessful. This is a company that, while not only does it have quarter after quarter, record after record revenue, but the profits are eventually going to come, and I think that is very soon, likely between now and the next 4 quarters. Now, if we keep on going beyond that, we look at the second largest position, one that has just been overblown to a level that is just It's kind of ridiculous. Now, I understand that the stock has went down, and maybe it deserved to be at least a little bit, especially from those highs back in the high $100, $200 range. It was a little ridiculous. But look at the 5-year chart on iRobot. 5 years ago, this company was a $54 stock. It's barely went anywhere in that time. In 5 years, from all the gains in the economy and all the stimulus and all the share buybacks that this company has done, it's went up 18% in half of a decade. And this is also a time where, generally speaking, the stock market has been roaring higher. We've had our issues over the last 5 years, like the 2018 dip with the trade war and interest rates. We had the 2020 crash. We've had this little correction at the end of 2021 going into 2022. But generally speaking, this stock has went nowhere. Now, looking over this 5 years, let's pull up the annual chart for iRobot, okay? Okay, this is the chart for iRobot, and this is on an annual basis, looking over the last 5 years. This stock chart that we just pulled up right here goes back to 2017, okay? So if we look at 2017 numbers, this company was doing $883 million in revenue. The next year, $1.09 billion. The next year, $1.21 billion. The next year, $1.43 billion, and then they just finished their earnings just a couple days before I'm filming this at $1.56 billion. Look at what the revenue has done from 2017 to the end of 2021, from $883 million to $1.56 billion. That is almost exactly a double up, just under a double up in the last 5 years. And in terms of their profitability, this was the 1 year they've lagged in profitability, in which obviously, like I said, that is part of the reason for the stock price being downturned, but this is a 1 year mishap because everything that could have affected this company's profitability this year, and even going into, unfortunately, some of 2022, is happened. Because whether it's a semiconductor shortage, a labor shortage, inflation prices, shipping constraints, all these issues affected them in 2021. But even then, the profits, if you ignore this year, where do they look like they're going over time? Net income, 2017, $51 million, up to $88 million, $85 million. Last year's $147 million. Over that time period of about a 4-year span, it went from pretty much a triple up, from $51 million to $147. And they're projecting that this year, and especially going into 2023, the profits are not only going to get back to these all-time highs, but is going to drastically exceed these levels, well over 200, maybe even 300 million in net income. And that's why the long-term profit margins, I think, will improve. If you ignore this 1 year, they're generally trending upwards. But once again, the stock price has faltered and is one of my largest positions. And looking over the last couple months, you can see that once again, going back to November when my portfolio was at an all-time high, this company was edging back up towards $100, thinking that it's going to recover. And now today, it finished out today's performance at $64, and that's even after today's green day of a couple percent upwards. So $64 from a previous high just the other day at 100 is still a pretty big downturn, almost in half. Now, if we look at my third largest position, which is finally starting to recover, which is Corsair Gaming. Another reason why my portfolio is downturned, if you look at just the other day during that November high, this company was around a $26 high. And then just the other day, it was closing out at $18 a share. That is a pretty dramatic downturn on a percentage basis. On a percentage basis, that's about a 30% downturn. And once again, looking at Corsair Gaming, this is a company that just reported its earnings, and it was pretty good. I have to say, I was really impressed. They are almost back to that all-time high revenue. Now, this is a company that sells gaming and computer products, so obviously they're going to have record numbers during the pandemic when everybody's shut down and forced to stay inside. But now a lot of people, when you get right here, when you get to this number where I'm hovering over at 391 million at the third quarter of 2021, you see this consecutive revenue go down and down and down 3 or 4 quarters in a row, and you immediately think, this is a pandemic play. This is a company that's not going to grow again. It's a company that was just a company that thrived during the shutdowns, and it's going to go to nothing. It's going to falter. It's going to be a failure. And then what do they do this quarter? They almost get back to those record levels, just shy of about $40 million. They're, I think it was 8.5%, if I'm doing that math correctly. But they're about 8.5% downturn from what they did at the peak of the coronavirus levels. 556 million at the absolute peak of the coronavirus, and now they're doing 510 million, and they're projecting that going into next year, they're going to have higher revenue. On an annual basis, if you take away those quarter-over-quarter numbers and you look on an annual basis, this company not only met what it did during the lockdown, during the shutdowns, but it actually exceeded it. In 2020, it did 1.7 billion in revenue. In 2021, it did 1.9 billion in revenue. Now, this is another thing when you look at the profitability quarter over quarter. You can see that the profitability, once again, skyrocketed up to 46 million. And much like iRobot, this company has faced labor shortages, supply chain issues, and the profitability is kind of lagged. And you're thinking, okay, is this company ever going to come back? Well, if you look at an annual basis, this is another thing that I'm telling you about. Like I said, they exceeded them in terms of revenue, but their profitability almost kept up to pace. 103 million in 2020, and in 2021, 100 million. Now, based off of the guidance that they just gave, I really believe that this company will beat these numbers by a little bit here going into 2022, especially on the back half of the year. I think they can exceed this record number of 103 million in net income, as well as exceeding this record revenue level. They projected to have about 2 billion in revenue for 2022, so that would represent a little bit of growth going into this year, some mid-single high digits. And then looking at profitability, they're probably going to be a little bit over this record number, probably somewhere around 110, 115 million in net income based off their projections. And that's why I think these profit margins will come back long term to their all-time highs of around 6-7%. And if that's the case, this company will continue to grow and hopefully in stock price hit all-time highs. And then last but not least, we have CleanSpark. This is another company that just reported revenue, and look at the levels that the stock was at in November. $22. Today it's at $8. That's well over a 50% downturn. Let's look at the 3-month chart. Going back to November 15th, that is a 59% downturn in the matter of 3 months. Now, this company is starting to recover a little bit looking over the last week. It's up 27% on the week and was up 53% at one point. And that's because of the amazing earnings that they just put up. They just put up 35 cents worth of earnings per share for this Bitcoin mining company. 35 cents for this $8 stock, and the record revenue was very high and are mining Bitcoins at levels that are just pretty much unprecedented. Now, regardless of what you think about these companies, or regardless whether or not you think I'm right in buying them, the story holds that pretty much every company that I'm invested in is either at or near record revenues and record profitability. And those that aren't at their record are normally very close to it. So it doesn't matter which company we're talking about of the 4 that I own, the business themselves are doing just fine. While their stock price may go down in price, who knows, maybe I overpaid for some of them, maybe I didn't. But all I know is that if you sell out on a downturn, you realize those losses. If you look at the last month, you can see that once it bottomed from that $38 share price, it has since recovered to $52 in just a matter of a couple weeks, about 2 or 3 weeks here. If you take 52 and divide that by 38, this company has rallied about 36% just in the last couple of weeks, and I definitely think it's going to get back to that all-time high. The further you zoom out, the better this chart looks, because if you look at, like, say, the 6-month chart, you think, oh my gosh, this company is really experiencing some pain. If you look at the year chart, you see the same. But once you get further out, once you get to 2 years, you see that, okay, it's up 87%. Once you click 5 years, which goes back to this company's IPO, it's up 44%. And the same thing goes for pretty much all these companies. They're going to grow. They're going to go up in price over time. In the meantime, I'm selling covered calls against them, and I'm going to be just fine. Sometimes it's really hard to watch your portfolio absolutely free fall, and I will say that mine fell significantly more than I ever thought it would in that 2 or 3 month span. Going from 40,000 to 24,000 was hard. 15-ish thousand dollars in just a matter of 2 months while I'm putting money in is very hard to watch. So realistically, it even fell more than that. And I think I have some great things in store. So assuming we don't have any type of impending market crash between now and February of 2023, I really think that this goal is realistic, and I really think that I can do it. But regardless, guys, if you haven't already, get $50 for getting signed up with M1 Finance. Absolutely free to do. It is no fees whatsoever. It's a company that I love, company that I stand behind, and I 100% recommend them. But thank you guys so much for watching. I appreciate you keeping up with me in these goals, and I'll catch you guys next time.